All right, YouTube. So today we're going to talk about something that a lot of traders don't have, which is realistic expectations. A lot of people have the wrong expectations about trading. They think it's normal to be able to make 20R a month every single month, year in, year out. And I'm here to tell you that if that's what you're thinking, that's completely wrong. And I'm here to completely change your mind on that. Nowadays, it's kind of been sold to us to believe in the fact that we can make, let's say, 20 to 50R a month every single month by having 1 to 100R trades. And that's just not how it works. And in the professional world, they'll laugh at you if you say that you're taking 1 to 100R trades. Now, it makes sense. We all fell for it. I fell for it for sure. And it's mainly because we're all starting out small, right? Everyone's starting out with 100 or maybe 1,000 euros or $1,000. And we're all hoping to be able to flip that and to make some money and to start making real money that we can live off of as soon as possible. And a lot of people nowadays are selling stuff, and a lot of people nowadays know that, and they know the perfect marketing gimmick is essentially to tell you that you can make 20R a month, you can flip your account within 2 weeks by, for example, following what they're doing. Now that is very attractive, especially for someone who's trading with low capital, for someone who's just starting out, but that is far from the truth, and I'm here to tell you why. So a lot of people, for example, want to make 30 to 40% a month on their trading account, or even 10 to 20% a month every single month, which is possible for sure. It's possible to make, for example, 10 to 20% a month. But you've got to be willing to lose 10 to 20% a month too, which is what a lot of traders are not comfortable with. They want to make 10 to 20% a month, but they don't want to experience the drawdown that comes with that. So basically, based on a probability model, which trading is, based on probabilities, it is statistically impossible to continuously make 10 to 20% a month without ever getting into 10% drawdown. And that's just something to keep in mind as well. If you're going to be risking a lot because you want to make high returns percentage-wise, you're obviously going to have a pretty high drawdown too. So I'm just going to be speaking in terms of R, because RR is pretty much static. It's consistent. Everyone uses R. So in terms of R, the expectation with a lot of people now is that it's possible to make 10 to 20R every single month. Fortunately, that's not how it works, and it's kind of ruined everyone's expectations of trading, including mine when I first started out. I thought I should be able to make 10 to 20R every single month. Now, there's a multitude of reasons why that is. It's because, first of all, prop firms obviously telling us that we had to make 10R in 30 days back in the day. I don't know if some of you guys still remember, but there used to be a time limit on prop firm challenges where you had to make 10R in 30 days. So that brought unrealistic expectations on the trader as well. They thought that it was normal to be able to make 10R in 30 days. And with that, obviously, came the marketing gimmicks and people claiming to be able to make 10 to 20R in just a week so people could pass the prop firm challenge, stuff like that. And it's honestly, in my opinion, it's created a whole lot of fuss in this industry because it's caused a lot of traders to believe that it's normal and you should make 10R every single month. Now, if we're going to take a look at what consistent trading really is, in my opinion at least, if you look at hedge funds, for example, or capital management firms, it's more about making consistent returns, 20 to 30 to 40% at the end of the year, rather than trying to squeeze out every little bit of profit you can get from the market. So being realistic as a trader is accepting that trading is not about making 10 to 20R a month. Trading is about having consistent withdrawals by consistently executing on your edge. And if you're consistently executing on a solid edge, you should be able to make between 3 to 6R a month. But with that said, statistically, it's always going to happen that you eventually take a losing streak. And eventually you're going to end up having a couple of losing weeks or even a losing month as well. There's no way around that. It is statistically impossible when you're talking about probabilities. It is mathematically impossible not to eventually experience a losing streak when you're, for example, trading with a 50% win rate with a 1 to 2 RR. Statistically, eventually you're going to end up taking a losing streak, and most likely you're going to end up having a losing month if you trade the strategy for long enough. So being realistic as a trader is highly important. Kind of to summarize, I think a lot of people have unrealistic expectations because of prop firms and because of marketing gimmicks. Basically people claiming that you can make 10 to 20 R a month every single month. That's not how it works. Us as traders, me and my team, we're doing pretty well. We're averaging about 3 to 6 R a month, which is extremely solid. Right now, at the time of recording, it's June, and in the month of June I am up 5 R, and last month in the month of May I was actually down 2 R, and then before that we had a good month. We did about 8 R. So at the end of the year, if you're gonna basically look at an average, we're probably averaging between the 3 to 6 R a month. Now that to me is consistent trading, and that's realistic trading as well. That's what keeps you sane, because trying to go for these 1 to 100 Rs, trying to squeeze out 20 R a month, that's not sustainable as a trader. It's going to be really bad for your mental health too. So it's really important to keep realistic expectations as a trader. Speaking of realistic expectations, how do you switch from thinking that 10 to 20 R is feasible to thinking that you should be okay with 3 to 6 R? Now that's another topic which a lot of traders struggle with. You should treat trading as a business, and it's not an infinite money glitch. It's not GTA. We're not doing a money glitch here. We're essentially just running a business. The difference is that we're not, for example, selling our stock. We're essentially just trading against the markets. We're selling and buying CFDs. Now, understanding that 3 to 6 R a month is extremely good trading comes from a place of acceptance. Understanding that trading is not a get-rich-quick scheme, and there's no way to consistently make 20 R a month every single month for a whole year or for multiple years. That's just not how trading works. If it was, then hedge funds or professional trading firms, they would not have losing months. Now I'm going to show you guys a track record here, and this is a track record that belongs to a professional capital management firm. And you can even go and look these up. There's a lot of capital management firms out there who essentially trade Forex or stocks or whatever, and they always post their track record publicly to attract investors, obviously. Now if you go and take a look at these track records, you'll see that there's a couple of losing months almost every year, and sometimes there's even a losing year in some capital management firms. That's because the goal as traders is essentially just, in my opinion, to outperform the average S&P return, which on average is about 10% a year. So if you can do anything above that, in my opinion, you're already doing good as a trader. And this is what real trading has always been, and this is what it used to be back in the day. It's just been so fucked up by the marketing gimmicks that we see nowadays. But essentially, as a trader, all you're looking to do is just get consistent returns of maybe 20, 30, maybe 40% a year. And if you take a look at these capital management firms and these hedge funds, their track records, it clearly states some of these firms make maybe 10% a year, sometimes 20% a year, sometimes maybe 25 to 30% a year. But you don't see these ridiculous amounts of 200 or 400% a year. Because let's say you're taking 20 R a month for 10 months straight, that'd be 200 R. You never see a professional firm doing 200% in a year. If they did, then investors would probably consider that to be gambling, and they would not want to invest in a firm like that. What they want is a firm or a trader that consistently manages risk, and that consistently trades conservatively, and that consistently manages to make decent returns year by year. So it's a little bit of a rant maybe, but I do think this video is highly important, especially for traders who are still expecting that it's normal to make 20 R every single month. Trust me, if you were able to make 20 R every single month, you would be a billionaire in no time. That's not how it works. It's a game of probabilities. It's not exact math. It's not exact science. It's probabilities, and there's no guarantee in probabilities. I hope I was able to clear up some of the unrealistic expectations some of you may have had, and hopefully we can now all work together towards a better industry standard in which we don't promote these bullshit standards of 20 R a month, but in which we embrace the fact that we're going to be doing really well if we can manage to do 3 to 6 R consistently every single month. All right, guys, take care, and I'll see you guys in the next video.